All right, Facebook, how are we? No. Are we there? Think we are. Good. Right, I wanted to do a video this morning because we've been getting a lot of questions in at Traders Support Club. A lot of them on similar lines. And one of the questions that keeps coming up, and I think it could be due to what is going on at the moment, a lot of people are reviewing finances, finding themselves in a difficult situation. And you've basically got two camps here. What you've got is you've got the people who've never traded before, and then you've got the people that have traded and aren't getting the result that they want. And really that's the only reason people come and see us, is they want to learn and learn correctly, or they're not delivering on the strategy they're trading, or they're not able to get the results that they want. And one of the questions that keeps coming up is whether or not Forex trading is right for me. So is Forex trading right for me, or how do I know when Forex trading is working for me? Now, the standard way that you would look at this is you would simply look at a trader's results. So I would look at a trader's results, and the first thing I would look at is overall percentage return. So are they profitable, and are they consistently profitable over a period of time? Any trader can make money in a week, any trader can make money in a month, but are they consistently profitable over a period of time? The challenge with that is a lot of people, when they ask that question, they measure it over a very short period of time. So if they've had a losing week, they start questioning whether or not Forex is right for them, whether or not trading is right for them. But they're looking at that experience over too short a period of time. And this is really important. So number one, if you're going to really measure and ask yourself, is Forex trading right for you? You've got to have a clear data set, and you've got to have a decent data sample that you're looking at. So it's no good asking that question just simply because you've had a bad week or a bad month. Other measurables, it's no good just saying, well, I'm profitable. And one of the ones that I can't bear, one of the big bugbearers that I have, is when you get a scenario where people will turn around and they'll say, I've made 1,000 pips this week, or I'm up 50 pips, or I made a quick 20 pips this morning in the market. Well, firstly, pips are no measurement, or no clear measurement of success, because you may have made 20 pips, but you may have risked 40 pips on the trade to get there. It also doesn't tell you what percentage of your account's at risk. So if you are measuring on pips and then you keep losing, but you're risking more on a trade than 1% or at a maximum 2% as a swing or position trader, then it could look like, and if you're asking that same question, is Forex trading working for me? Well, the answer would be no. So it's really important not to be measuring just on the number of pips that you get. And if you have set yourself a target, so I see this with traders, they want to make 100 pips a day. And again, madness, because if you make 99, you might be making, or if you're the trader that's making 80 pips a day, but you're doing it only risking 20 on 2 trades, then that is way better than somebody that makes the 100 pips but is risking 200 or 300 pips to get their 100. So measuring it and asking if Forex trading works for you by measuring the number of pips, again, is the wrong way to do it. And a lot of traders will also have a percentage return in mind, but they're not measuring drawdown. So what ends up happening is they see a loss, or they see that they're losing money on their trades, and then they question it, but it could just be a period of drawdown that they're going through. And if they're managing their risk incorrectly, then they could be losing 3, 4, 5, 6% in a month, whereas if they were managing their risk correctly, they could be losing 1 or 2. So again, measuring it simply by the number of pips is not a way to see whether or not trading or Forex trading is working for you. But again, I think this question can be looked at a slightly different way, because saying is Forex trading right for you is often too broad, because what it doesn't take into account is that person. And this is the trouble, is a lot of people, when they want to learn to trade, is they come along and they say, right, I need a cookie cutter approach. Just give me a strategy, I'll go and trade it, and then I'll be successful. I was working with a gentleman very recently in our trading room, and he was saying exactly the same thing. He's like, well, if you just give me the 2 strategies, Ali, then it's cookie cutter, isn't it? I just go and trade them the same way as you. The challenge is that person may not have the same trading objectives as me, they may not have the same personality style, they may not have the same risk profile. So in a situation like that, you have a strategy that is exactly the same as the other person, but the other trader is not delivering it in the same way. And I've seen this. I've sat and coached traders where I've literally watched them, and they're both in the same position, and they both got pretty much the same target, yet the two traders have behaved completely differently. One has held the trade to target, and the other has got out too soon. So it can be, when you're asking that question, is Forex trading working for me, or how do I know? Well, one of the things you're probably doing is asking the question that's too broad. So it should be, I think, a better question to ask would be, is what type of trading would work for me? And one of the things people don't do is they don't take into account their preconceived ideas. So another one is that there's a perception that Forex trading is risky. Well, Forex trading is risky, like I've said, if you're risking too much on a trade and you're trading 5 or 6 times a day and you don't have a plan and you don't have a strategy. But I think a better question to ask is, what type of trading would work for me? So very simply, would it be day? Would it be swing? Would it be position? And I've worked with traders that want to day trade, but their decision-making speed, their personality style doesn't suit that. So actually, they're better off swing trading. So that's a really important question. Which type of trading? Day, swing, or position? Which one is a better one to be trading? And then another one that's massively overlooked is whether or not you should focus on with the trend trading against the trend trading. A lot of traders will assume that with the trend trading is risky, but 80% of all the trading that I do is, sorry, not with the trend trading, a lot of traders would perceive that against the trend trading is risky, when in fact 80% of what I do is against the trend, but it's tested, it's proven, and most importantly, it suits my trading style. And a lot of traders will say to me, well, how do I know which style works? Well, get some feedback from somebody that could actually show you the different types of style, and then you can go away and test and see which you prefer. So I much prefer trading against the trend, but just because I prefer it doesn't necessarily mean it will work for me. I've got to make sure I've got the strategy as well. And that brings in another factor, which is personality. So a lot of traders will be trading a style of trading that doesn't suit their personality. Another one is goals. So traders might say, well, I don't know if this is working for me, and how can I measure it? Well, what did you set out as your objective? What was your clear return on investment goal when you started out? So for me personally, I'm looking for 50% a year. That's my benchmark, that's my goal. If I make 50% a year on my personal swing trading account, I've had a good year and I'm happy with that. But I'm also willing to make less than that. It might be like last year that I made 72% return on my personal account, and at the moment, if I look at where I am this year, I'm lower down. So I'm willing to take that as an average, because I've got to factor in that there might be a worse year, the strategies might go through a drawdown period, it might take me longer to recover from that. So it's really, really important to understand that that figure of 50%, I'm willing to go above it and I'm willing to go below it, and not just simply think that trading and Forex trading isn't working because I didn't hit 50% that year, or didn't hit the equivalent of 15-20% in that quarter. Another one is appetite for risk. So this is another really, really important one. Now, a lot of traders think by that because you're trading Forex, you've got to have a level of high risk, and this isn't the case. But when I talk about appetite for risk, I'm relating it to the type of trading you're doing. I'm making the assumption that you're managing trades correctly, and if you don't know how to do that, you should be talking to us or somebody that can show you how to do that. But your appetite for risk is more based around, are you happy to be trading 3 or 4 times a day, or would you rather, like me, trade 2, 3, 4 times a week? So as a swing trader, my appetite for risk is around the 3 to 4 trades a week. And I don't want to be in a situation where I'm trading 5 or 6 trades in the morning. So I started out as a day trader because my appetite for risk when I was younger was higher, but my appetite for risk has dropped. But that doesn't mean that because my appetite for risk has dropped, I'm scared of placing trades. That's not what it means. But it's looking at how realistic your your life, your circumstances, and your personality would suit trading for 2 or 3 hours in the morning. And some people literally can't fit that in. So it's very, very important when you're asking, is Forex trading working for me? Is Forex trading right for you? Think about what your appetite for risk is. And the last one that gets overlooked a lot is time. So there's 2 factors with time that are very important. How much time can you give to actually learning, and how much time can you give to applying the trading you're doing? And if you think about it on a weekly basis, so I break it down into chunks and say, okay, how many hours can you consistently put in on a week by week basis? But that's only one element of it, because the challenge with that is a lot of people, their weeks shift and change. So they might say, well, I can put in 5-6 hours a week, but this week that can only be Monday and Tuesday, but the week after it's an hour a day. So as a swing trader, how do you know if trading's working for you? Yes, we've talked about results, but you've got to be able to put in consistent amount of time. So my weeks vary, very similar at the moment, but my weeks vary, but I've got to make sure that I find 5 to 6 hours a week to do my analysis, place my trades and track my possible trades, fill in my spreadsheet and review the trades that I'm doing. Now that might shift in terms of when that happens, but with auto trading entry robots like we have, that gives you a little bit more flexibility. So time like that. But as a day trader, this is really important. So as a day trader, you have to be able to give consistent periods of time. So we use the example of morning slots between 7 and 9, or morning slots between 7 and 10, Monday to Thursday. If you're in a situation where you do that one week and then the next week you only trade afternoons on a Tuesday, then you're not going to give your strategy a chance to work. So when you ask the question, well, is this working for me? But you've given it a time period that changes every week, the answer is probably going to be no. So you've got to give yourself a fair start if you're going to be a day trader, and that fair start is that you've got to be able to say, right, I am going to be able to give consistent slots of time over the week. And it's better to say I can do mornings, Monday to Thursday, than try and trade all day. And that links back to your personality style. So when I was a day trader, I soon realized that if I sat in front of my screen all day, I started to cause trouble, I started to overtrade, I started to get bored. So if you'd asked me the question, or I'd asked the question of myself at that point, does Forex or is Forex trading working for me? At that point, the answer would be no. So then how do I know if it is? Well, the time that I put in gives me over a decent period of time. The time I put in is giving me the return. So at the moment, if I'm putting in 5 to 6 hours a week and I'm hitting a 50% return on a yearly basis, if I'm asking that question, is Forex trading, or how do I know it's working for me? Because the return versus the time and effort meet. I'm happy with where those two are. So really important, that last one. And then I think being clear on your goals. So I think if you're not clear on what it is you want to achieve and you just simply want to make money, then the way you're able to the way you measure that becomes tricky. So the chances are, if you've hit a 5% month and your goal is, and you haven't got a clear goal, so you haven't set that, you hit 5% a month, you'll probably become addicted to that very quickly. I've seen traders that have made 5, even 10% in a month, and their expectation is that they're going to do that. So then, how do I know if Forex trading is working for me? Well, they'll say, well, it's working for me if I can make 5% a month. But what if the strategy they trade averages 3% and they're going to fluctuate between that? So being clear on what your overall goal is over a 1 year, 2 year, 5 year period. And I was chatting to Martin, one of our other trainers, last week, and he said that the big mistake day traders make, and they say it's not working for them, is they think because they day trade, they've got to hit a certain return every week. And he said a day trader still needs to have the same outlook as a swing trader and not really be reviewing or changing anything unless they've been trading for a minimum of 3 months. So really important that you're clear on your goal and you're clear on the timeline and you give yourself enough time. And I think lastly is, if you're not clear on this, or you're not able to measure, is get help from somebody. Get help from somebody that's not simply just going to turn around to you and say, this way of trading is the best. Because that might be working for them, and then when you measure it, you're like, well, it's not working for me. So part of it is making sure that you are happy to, you speak to someone who is happy to turn around and say, look, this is how I trade, but based on what you want to achieve and where you want to be, this might work for you. And it's that level of feedback from somebody who's not just simply going to tell you that their way of doing things is best. So how do you know if Forex trading's working for you? Well, it's consistent returns over a period of time, but being willing to know that they move. And then on top of that is things like personality style, and know you're trading the right type of personality for you. It is being clear about your goals, your appetite for risk, and making sure the time that you put in gives you the return relative to that. That's all I got for today. I'll catch up with you again soon.